Hi guys, welcome to my channel. My name is Aziz. I've been in crypto since 2015 and I decided to make this channel to talk about my experiences and research of different crypto projects. Today I want to talk to you about Canto. So this project has a lot of hype recently. It's done a very good run. Before I get started, I just want to say that obviously if you think I say in this video is not financial advice, do your own due diligence. And I also want to say I do have a little bit of tokens, but that's not really a position. It's more like I wanted to test out the bridge, etc. So I just wanted to make those disclaimers. Anyway, so what is Canto? So it's EVM compatible layer 1 blockchain built with Cosmos SDK with free DeFi. Okay, so their main aim is to be a more fairer version of the DeFi protocols, or they have a different approach. Usually we have three different products in DeFi. So you have a decentralized exchange. So they have a DEX called the Canto DEX. That is a fork of Solidly. They have a lending market, which is a fork of Compound version 2. And they have a note, which is not exactly a stable coin, even though they call it here. But from the videos and the research I've done, the reason why they prefer not to call it a stable coin but a unit of account is because you can't actually redeem note for a stable, as in for USD. So although it tries to mimic the price of USD, you can't actually redeem it for USD. So hence why they prefer not to call it a stable coin. I know this is their docs, but I'm literally saying what they've said from some of the interviews, etc. I've watched. So the price of note basically fluctuates based on the interest. So if the interest goes above and below $1, they'll basically tweak. So it's basically algorithmic. They'll tweak the interest so that the price basically tries to mimic or stay at $1 as close as possible. So they believe liquidity as a free public good. They have zero fee for liquidity providers, LPs. Canto makes liquidity free for protocols, arbitragers and traders. Rent extraction resistance. So Canto aims to establish free public infrastructure. Core DeFi primitives will not have sovereign governance tokens nor the capacity to extract rent in the future. So this is what I was talking about in terms of their thesis, or their ideology is different. So this is what makes it very experimental and interesting in my idea also. And they've done other things in like investment, etc., which I'll get into later. They've taken a different approach. Minimal viable user capture. Where possible, Canto avoids interface-driven user ownership. Canto infrastructure dexes will have no swapping interface, so all users must trade on third-party aggregators. This will facilitate user acquisition for new protocols. There's no way that you can actually buy their own token even on their own native DEX. You have to use a third-party DEX. So that's what basically they mean by third-party aggregators, even though the team members have made one of the leading ones, aka Slingshot, but obviously it's a free game, free market. You can, wherever there's liquidity, most liquidity or the best UI UX, the users will end up going to. So that's basically their core tenants and their main products. So they have a DEX, a lending market, and Note. So the way, like I said, Note is not exactly a stable coin because you can't redeem it for USD, but it tends to, they try to keep the price fixed at $1 basically by tweaking the interest rates, and these are their core tenants. So in terms of their teams, one of the contributors I found was Scott Lewis. He's I've been following him on Twitter for quite a while. I didn't realize it was his project actually, and that's what also was one of the reasons why I decided to take a look at this project, because he's shared and he's done some interesting things in the past. He's contributed to different stuff in the Ethereum ecosystem. So Scott Lewis, I'll obviously leave all the links in the description. He seems to be like the face of the project, even though, like I said, there's no traditional team or someone that's like owns the project, etc. But if there's any face that you can find, it's basically his face, Scott Lewis. And so this is his Twitter. Then you have a few more people. There's this gentleman here, or lady, and you have ZK Cole. you have Robin Whitney. So one thing I noticed is most of these people were part of DeFi Pulse and Slingshot previously, which is the DEX that actually list Canto. And also you have three different contributors in terms of company, like so you have B Harvest, you have Plex, and you also have Neobase. So these three companies, and you have those other four gentlemen. But obviously, like I said, these are just what I found, and there's obviously way more contributors, I'd imagine. So in terms of the raises, so that's another really interesting thing about this project. They actually don't have any ICO or investment, like like the traditional investment, like pre-round or pre-seed or seed or anything like that. They have no vesting, they have no pre-sale, there's no foundation either. Variant Fund, which is basically a fund made by Jesse Weldon. He was previously at Andreessen Horowitz A16Z. And it's also, I don't know if you guys know, but Spencer Noon, he's got a newsletter called Our Network. I really love that. It's basically just straight facts and charts, etc. So Spencer Noon and Jesse Weldon, they're part of this fund called Variant Fund, and they've actually taken a position, but it's important to know that this is a position as in not before ICO or seed or anything like that. They bought it basically on the market. In terms of the roadmap, I couldn't find anything on their website. This is something that they've done recently, CSR, fee sharing. So CSR basically stands for Contract Secured Revenue. The idea is a developer. I actually find this very interesting, and this is another thing I found about the project that was innovative. So basically what this is contract secured revenue is if a developer decides to make a DEX on Canto or anything that basically has a lot of usage or people decide using it, he could actually earn a percentage of the fee. So the transaction fee, he could actually earn a percentage. I believe it's around 20%, but that could change based on governance. So this is a very interesting idea. So basically, if you have a DApp that has, so instead of raising like millions of dollars up front, you can basically launch a minimum viable product, as in see demand and see if it does transactions, etc., and then you could actually earn from the fee. So that's actually something that I haven't seen in crypto before, actually, and this, I find it quite cool. And this can every crypto project, every coin basically thrives off developers, right? And this is a very unique way of attracting developers. So I can actually see this being copied by other projects, because this is like, they might change the parameters, etc., but this idea of I'm not even entirely sure if they came up with this idea or they made it themselves, but it seems to be the first implementation that I've personally seen. So a developer can make a DEX or NFT platform or something, and they can actually earn a percentage of the fees. So that incentivizes developers to create really good products in this ecosystem. So that's something that they launched literally recently, within the last 2 weeks. So that's one thing I found out very interesting. And also they have another project called Yubari Finance, and they teased of launching a 5x leverage trading on Canto. So that'll be actually interesting also. So yeah, that's in terms of the roadmap, because I couldn't find too much. Like I said, they don't have a team. It's basically everything's done in like a DAO style. Then you have the token. So they have 1 billion, and 20% is going on grants settlers, which is early incentivized testnet users, and grants and contributors, and 80% is going on liquidity mining. So you have 35% on short to medium term liquidity mining, and then you have long term liquidity mining 45%. Okay, so I'm going to talk a bit more about this later and why it's interesting in terms of how I'm personally planning on accumulating this token. But that's basically the token distribution is quite steep at the moment. So right now it's actually increasing, I'll call it exponentially, or quite aggressively. And then you have a Bybit article as well. They basically combine the liquidity mining, the short term and the medium term and the long term liquidity mining, and they put it all in one color. In terms of the use cases of the token, we have is basically used for governance, and the transactions get distributed to the stakers as well. They have right now 423 million, so about a fourth of it is actually circulating right now. So in terms of the community, I found their Twitter to be, Twitter seems to be buzzing about it, and their Discord is quite active if you have any problems. In terms of my buying strategy, etc. So first things first, there's two ways of basically accumulating the token. One is on a centralized exchange. You can go on the markets, and basically there's centralized exchanges. MX seems to have the most volume out of the centralized exchanges, and then there's their DEXs and the bridge feature. Like I said, I'll leave the links in the description. I did try the bridge feature. It's not the most straightforward. If you're quite advanced and you know how to use all the bridges, etc., then you would find it easy. If not, I think MXC is probably the easiest for most people. But like I said, not financial advice. Therefore, do your own due diligence before you decide to accumulate any crypto token. So my personal strategy and my concerns. So I'll just go over my concerns, then I'll talk about my strategy. So number one, there's a Bybit article that basically claims that 29 contributors got around 13% of the total supply. So that's not circulating supply, that's total supply. So that's one thing I was quite concerned about. I mean, it's not the worst thing I've seen definitely more worse distributions in the past, but that is worrying for a project that, you know, has these kind of core tenets and thesis of like trying to launch in a very fair manner. To be fair, it hasn't really strayed me off, but it's just something that I think you might want to know, especially if you're planning on accumulating the token, etc. So that's one thing that kind of made me a bit wary about the project. And the second thing is this algorithmic stablecoin space. We've seen Luna, etc., UST collapse, and algorithmic stablecoins just generally they're very novel, and you know, they're very innovative, and you know, I do like projects that try, etc. But just know that, you know, they're extremely hard, and there's a very big, not just algorithmic stablecoins, but stablecoins. I might do a video about this, a whole video about this, but long story short, there's usually a very big incentive to destable a stablecoin. So for example, if you borrow like $10 million out of a coin, and then, you know, you can depeg it, clearly there's a big incentive for you to depeg it, right? And so that's my other concern about this project. It hasn't swayed me from not wanting to accumulate anyway, from accumulating it, but it is another concern I've had about the project. But overall, I do like their thesis, the way they're going about things, and I can totally understand the recent hype of the project. So in terms of my accumulation strategy, so because it's already pumped quite a bit recently, and I want to basically show the Masaru article. So right now we're basically here where it's getting inflated quite a bit by the midterm to long term people, the short to midterm liquidity providers. So that's why right now you might have seen the market cap go up, because not only is the price increasing, the actual tokens are increasing drastically, and so that's why the market cap has gone up significantly, way faster. So you can see the chart initially went down and then it went up, and so my plan is I'll probably wait, because obviously I haven't got it already. I might wait for 25 cents or lower. If it doesn't hit those, that's fine. There's, you know, many opportunities in crypto. Personally, I wouldn't want to fall more here, but because there's been quite a big sharp increase in tokens, I actually believe it's going to come down. That's my personal opinion. I think all these people that have been earning these tokens, you know, once they realize that, you know, it's not as inflationary, because obviously a lot of people just trying to earn as much as they can, right? And once they realize it's not going to be as inflationary as before, you know, they might decide to dump, or, you know, they'll decide what they want to do with the project. May sell half or buy half, or, you know, keep half, etc. I could be wrong, because the project is, you know, compared to some other project, I would say it's undervalued. It's not as undervalued as when I first came into, first heard about it. It was around 40-50 million market cap. Around there, I thought it was a no-brainer. But anyway, procrastination, etc. I've been quite busy as well, so I haven't been able to actually buy a position. But that's my personal plan. I wouldn't want to, because I actually think it's going to come down. 25 cents is probably the first place I want to start accumulating, or maybe 30 cents if I'm, you know, getting a bit FOMO'd. But apart from that, I wouldn't buy it here, definitely, because it's just done literally from the January, it's done like a 4x, and I don't see it sustaining that 4x, especially with the high emission rate, with so many people getting so much tokens. So that's my personal strategy, guys. Hope you enjoyed the video, and I will see you in the next one.